Hello, welcome to Askimo TV. I'm here with Michael Friedman, the Executive Director of Asquith Merchant Bank. And today we're going to be talking about merchant banking and what it is. So welcome, Michael. And perhaps you can just launch in and start to tell us a little bit about what is merchant banking.
Sure. Merchant banking is about investing in businesses that are looking to expand. So it's about helping companies, real entrepreneurs, real businesses to grow in a way that's different from, for example, making a regular loan to them.
Okay, so can you tell me a little bit about how it differs from regular banking?
Yeah, well, there are really two types of regular banking. One of them is retail banking, which is something that members of the public are used to seeing on their high street, such as HSBC or Citibank. And then there's commercial banking, which are the big investment banks and so on, which live in Wall Street and the City of London, and what they do is help very big businesses. So merchant banking falls somewhere in between in terms of the size and the type of things that it does.
Okay, so what would be the advantages of putting my money in a merchant bank, and is that even an option for a regular person, a regular customer or consumer?
It's usually not an option. Investing in merchant banking has an element of risk to it. So although most transactions that a merchant bank will invest in have some form of security, so for example, you own a stake in the company, or you're secured on assets, or you're secured on the goods that you're helping to finance, it's usually something which does have an element of risk to it, and it's therefore something that usually is reserved for high net worth investors.
Mm-hmm. So what would be a typical structure of a merchant bank?
Well, the beauty of merchant banking is that there's no real typical structure. Merchant banking is a quite catch-all expression. So just to give you a flavor of the history of merchant banking and give you some idea of the different things that could be described in that way. So merchant banking stretches way back into the Middle Ages and even earlier than that. And it was a process by which high net worth investors, and the most famous of them you can even find in plays by Shakespeare, for example, would lend money or invest money into the businesses of merchants, and that was really where this started. So in fact, the Italian word for a bench, which is banca, is where we get today's word for a bank, and it came because people would sit on benches in halls where they would collaborate to try and invest in or lend money to different merchants, and that's actually the real origin of the word bank. And then from there we evolved into the 18th and 19th century merchant banks, so really the original banks that we now think of, like the Rothschilds and the Warburgs, which are these kind of very big institutions. And where they came from was a predominantly the Jewish community, where historically they've been allowed to be money lenders, but very few other professions. And once they got to the point where they were allowed to emancipate, they took that skill that they had as lenders and they turned it into an investment opportunity that anybody could give them money that they would lend out at the other side and help companies to grow with. So you have different kinds of lending that materialize. And then in the modern times, merchant banking is also about quite specialized trade. You can have merchant banks that just specialize in helping to fund art, for example. There's one or two that all they do is buy and sell works of art on behalf of people, and they have a fund that just lives to invest in art. And you have others that invest in very niche areas. There are some that just do real estate. There are others that do really orthodox trade finance. So, for example, somebody had to pay for Marco Polo to go down the spice route and come back with a roll of saffron. That would have been a merchant banker that effectively funded that. And today what we see is that that's the same process in international trade. And merchant banks tend to be the funders of quirky transactions that a regular bank can't understand or doesn't really have the capacity for risk to take on. And the way that we invest as a merchant bank is we put in usually equity into businesses, but we do so at a sort of strategic level. There can be a variety of different things.
Okay. And how would someone become a merchant banker?
Well, there are any number of different ways that could happen. The first is you find a merchant bank that you think looks interesting and you want to work for them, and you just apply for a job. And there are still quite a few merchant banks around. And actually, in the last years, more have emerged. Since the global financial crisis of 4 or 5 years ago, merchant banking is a very kind of transparent way of doing business. It's very easy for an investor to understand where his money is going. He may even have control on a deal-by-deal basis of where his money is going. So it's become a quite attractive asset class. So actually, there are probably more merchant banks back in existence now than there were, say, 5 or 10 years ago. So you can simply apply for a job at one. And the other way of going about it is that you can start your own. You have to be very careful about using the word bank because it has a regulated connotation, but actually merchant banking activity is not necessarily regulated. So if you want to be a merchant banker, then you can look at what the regulations are in your territory and you can start one. And the process of doing that is that you have to have access to a pot of capital, and you use that to invest in the projects that you believe in. So it's possible to even start one yourself.
Okay, well, thank you very much for that first introduction on merchant banking, and thank you for taking the time to be with us today.
Awesome.